Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Right now, with a blistering note, I want to make clear here, he was my market economist of the year 2-3 years ago for congenital optimism when everybody was gloomy. Neil Dutta, with a blistering note this morning on Kevin Warsh. Mr. Dutta is Economist Renaissance macro. Neil, come on, the first sentence. President Trump has picked everyone's least favorite candidate. Discuss.
Was it something I said? I don't think I stuttered, Tom. Well, he is everyone's least favorite candidate. I mean, to me, look, the main criticism I have of Kevin Warsh is lack of judgment, okay? Because his performance during the financial crisis was not a particularly good one. And I think you could say, arguably, that it is disqualifying. I mean, to be that concerned about inflation at a time when the unemployment rate was rising very rapidly, it kind of strains credulity. And in the years since, everyone makes bad calls, okay? I mean, I was market street economist for a while. I've made bad calls. Everyone makes bad calls. The issue is when you make bad calls and you're always wrong in the same direction, that to me shows open-mindedness.
I can't say enough how I agree with that, not for Mr. Warsh, folks, but part of the game is to be wrong and learn from it. You call him a cookie-cutter Republican coming off of Bush the Younger, the idea that he's a sweetheart of Wall Street, and you say it's time, you equate it here to say Warsh would make sense if Mitt Romney was president. Donald Trump is not Mitt Romney. Discuss the card-carrying Republican dealing with President Trump on a meeting-to-meeting basis.
Well, think about President Trump, I think, relative to the median Republican official, at least in my lifetime, has much better monetary policy instincts. I mean, remember, there was a time when people like Paul Ryan and Mitt Romney were talking about changing the Fed's mandate to just purely a price stability one. It's people like Kevin Warsh that love that, right? So, President Trump, by contrast, in many cases, got the nomination by bucking a lot of the traditional Republican orthodoxies, right? On trade, on immigration, on social insurance, on the Fed. And so I think that's what makes this so perplexing for, the so-called greatest jobs president that God ever invented. He's picked someone that's, frankly, based on his record, a threat to working people. Okay, so a member of the sort of MAGA movement, Kevin Warsh is not. Okay, and that's why I say, remember, there's also he has a track record too, right? I mean, he's critiqued previous administrations for not pursuing free trade deals. Now he's being nominated by someone that's trying to, rip up the sort of global trading system and try to kind of move it toward the U.S.'s favor, America's favor. So that's why I say, like, if you think that this is sort of a populist pick, if you think this is, someone that's a member of the sort of president's base, I'm not so sure about that.
Right. Hey, Neil, given this nomination, what do you think Fed Chairman Jay Powell will do?
Well, as I say, Kevin Warsh's newfound dovishness, all of a sudden, now that he's in the sort of public interview process for this job, all of a sudden he likes rate cuts. Okay, so that suspicion, I think, is going to pique the interest, or that about face from Warsh is going to pique the interest of not just Jerome Powell, but a lot of the people around the table at the FOMC. So if you're Powell, I don't know. Maybe you want to stick around a little bit longer, see what's up.
Interesting. Good morning, everyone. Neil Dutta with us. Jay Hatfield on deck. Claudia, Sahm coming up later. This is a special edition of Bloomberg Surveillance across America. Kevin Warsh, nominated, I should say, by the President of the United States to replace Jerome Powell. Of course, confirmation by banking is necessary. Neil, I want to polarize here the vector of Stephen Myron and Michael McKee speaking with the Governor Myron this afternoon, who's looking for a hugely accommodative Fed with the natural restrictiveness of Kevin Warsh. I mean, basically, Myron and Warsh are polar opposites that I can see in terms of tone. Discuss that. Does the president understand this is not a Myron replacement?
Yeah, I'm not so sure. I mean, I think, look, I mean, the president is trying to find someone that kind of that sort of believes in this notion of a golden age, of strong productivity growth, lower Nehru, I guess, and maybe he's found his person in, in Kevin Warsh. Steve Myron's been making similar arguments, but again, I mean, look at the look, Tom. I mean, has Myron been successful in swaying the committee to his point of view?
This kid comes out of Albany. He ends up at Stanford under the guise of Michael Boskin and John Taylor. He's got a shingle out Neil Dutta at the Hoover Institution. This screams to me restrictive GOP economics. Am I wrong on that? Jay Hatfield's over here nodding. Am I wrong on that?
No, I mean, look, I mean, this is someone that he clearly overweights the inflation side of the Fed's mandate relative to employment. Okay, I mean, I don't think that that's a particularly controversial thing to say. One thing I would say, though, is that you've heard a lot of folks in the administration talk about how they want the new Fed chairman to kind of pull an Alan Greenspan, right? And so the idea here is that in the 90s, Tom, as you know, Alan Greenspan resisted the temptation to raise interest rates in the mid 90s because productivity was strong and inflation was slowing, right? Now, if you actually go back at the time, I mean, that was coming off of a period where inflation had already been slowing. So that was sort of the opportunistic disinflationary years, right? And if you look at that time during the 90s, what was Greenspan really doing? He was really just following a Taylor rule. So the reason why they didn't hike in the mid 90s is because the data were more or less telling them not to hike in the mid 90s. I mean, yes, it is true the unemployment rate was declining, but inflation was also rapidly falling. And the combination of those two things is why interest rates didn't go up, the policy rate, that is. But, rarely is it mentioned, when you talk about pull a Greenspan. Look, think about what happened in the late 90s. There was an aggressive hiking cycle about a year after the LTCM blow up. And why was that happening? That was happening because the labor markets were red hot, right? So, again, I mean, we were having maybe a golden age then too, right? I mean, strong productivity growth, but because the labor markets were on fire, Alan Greenspan rapidly increased interest rates. So this notion of like pulling Alan Greenspan, I think it's a bit of a choose your own adventure. Yeah,
Neil, how controversial, if at all, do you think this confirmation process will be for Mr. Warsh?
Okay.
I mean, it's hard to know. I mean, I think there's obviously a lot of things going on in the background, right? I mean, Senator Tillis has basically said that he'd slow down the nomination process so long as this investigation into the Fed and, Jerome Powell remains open. We'll see if he means that. But that could presumably slow the process down a little bit. But as you know, guys, I mean, this role has become less sort of bipartisan, right? Like in my career, it was sort of every person that's been up for these jobs, Yankee, has had a thinner and thinner margin in the Senate when they've gotten confirmed.
Neil, I got to get to Jay Hatfield, but let me frame this out. We're going to go to Hatfield. I'm going to ask him the same questions, folks. Neil Dutta, right now, and you've been phenomenal about the labor fragility of America. What is your real GDP forward that Chairman Warsh is going to deal with? and the inflation overlay that's going to upset him to get the nominal GDP. How do you frame that out through the rest of the year?
Well, I mean, for me, Tom, I have a very much a sort of labor market driven view. And, aggregate hours are barely rising and wage growth is slowing. So, I think we're basically on track for, essentially a 4% nominal growth environment, maybe even a little bit lower than that. I mean, if you look at wages and salaries over the last couple of quarters, It's been quite. So really, you have to tell a tale for why the labor markets are going to strengthen. And It's hard to do that right now because, look at what consumers are saying about the jobs market.
Okay, we got to leave it there. Folks, I'm going to not mince words. We protect the copyright of all of our guests this morning. Neil Dutta with a fiery note out at Renaissance Macro. But bonus, Neil Dutta out on LinkedIn and Twitter. Look for Mr. Dutta, particularly on LinkedIn today, with fiery thoughts. His note, as you mentioned, Paul, is just really on fire. Neil Dutta, thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Chris Waller goes to the heart of the matter, which Claudia Sahm has lived, which is the jargon of their world, outreach meetings. I can't emphasize enough how hard our public officials work. They go to every Rotary breakfast. I can't say enough, folks, how they're on the road and not in the office with their Bloomberg terminal. Claudia Sahm, Governor Waller says there are multiple outreach meetings of planned layoffs. And I'm going to editorialize firings. Do you see that trend, Dr. Sahm, of layoffs like Amazon, like UPS?
So we have certainly seen layoff announcements pick up. That this is not new, right? We saw several of them last year and say the Challenger announcements. At this point, we haven't seen them translate into jobless claims, broader measures, aggregate measures of layoffs. So I think there's every reason to be concerned about the labor market. There's some signs of stabilization, but I think Waller is appropriate to, point out we are not out of the woods yet.
Stanford economics, everybody's got a different flavor associated with the Hoover Institution. What kind of inflation hawk, what kind of economist or lawyer comfortable with a restrictive policy is Kevin Warsh? What Claudia Sahm flavor is he?
So, I was at the Fed when Kevin Warsh was a governor. I've, watched him in action as a policymaker. I've certainly followed his comments since then. There's a lot about his track record and his recent comments about what we see in the economy and what's appropriate for interest rates. All that said, I think the conversation about Kevin Warsh, and again today, he got the nomination. He's not the Fed chair yet. He needs to go before the Senate. And I think the hearing, his confirmation hearing, should be a pretty difficult one. Because right now, the big conversation is about the independence of the Fed. Will it be free from political influence in setting interest rates? And there's some comments from Kevin Warsh I think he needs to be asked about. And that goes before all his views on the economy.
So, Claudia, what do you think the Fed should be thinking about right now? Again, it's got that dual mandate here, and we're getting more and more data as we speak here. What do you think the focus should be or is for the Fed right now?
Well, the Fed's focus should be its dual mandate. It should be about maintaining maximum employment and getting inflation back to the 2% target using the tools that it has. This is where, the unemployment rate is below 4.5%. The inflation rate is around 3%, much lower than it was, just a few years ago. But, it's not all the way back to target. So I think their job is not done. But I don't see this as a moment where we need to have, as Kevin Warsh has talked about, a regime change. Come in and knock heads, right? There's work to be done. There needs to be a continuity, a continued focus on the two sides of the mandate. And if we have a disruption to that, that could be, really problematic in general.
Paul, was that Claudia Sahm shade? Is that what we just
I don't know, maybe a little bit.
Shade there.
Claudia, how do you think Mr. Warsh will work with, interact with, deal with the other members of the Fed here if he is confirmed?
The public comments that he's made in recent months suggest that he's going to come in on a pretty combative footing. I mean, he's used words like knock some heads. He's been very critical of the Fed. I mean, he went so far as to accuse the Fed of its rate cuts in 2024 as the unemployment rate was rising, that was political. Right. That's a really serious accusation to make. The Fed was reacting to a labor market that looked like it might be unraveling. Right. So I think he's going to come in. The Fed works by consensus. By his own remarks, I think he's going to have a tough time building consensus, but he is capable of doing that. It's just it's going to be could be a rocky transition.
Claudia Sahm with us. We're thrilled to have her here in the 9 o'clock hour. Do we have Paul yet when we're going to get a press conference?
I have not seen
with the President of the United States. We don't have it yet. But again, for those joining, a nominee as chairman of the Federal Reserve System, Kevin Warsh. This morning, we've heard from Christopher Waller on his dissent. I'm sure we'll hear from others through the day. I want to emphasize here, and again, folks, this comes down to the pedigree. Claudia Sahm, Michigan PhD, absolutely definitive and trying to understand the quarter-to-quarter gyrations of recession. Or Richard Clarida, the vice chairman, and all of his work at Columbia, where he literally herded cats at Columbia for years, and his work with a strange thing called dynamic stochastic general equilibrium theory. Dr. Sahm, Lawyer Powell, I guess we really didn't know what he was going to do other than he was a finance guy. What was the song last summer? Looking for a finance guy?
Oh, yeah,
6'5".
Right.
He was blue-eyed and 6'5". Claudia Sahm, do you have any real understanding of Attorney Warsh's economics?
Warsh has said in interviews in recent months, last year, he was very critical of the models that the Fed uses, has, called them outdated, has, really pushed the idea that we need a new thinking. I mean, one of the things, Powell came in, he was not a dyed-in-the-wool monetary policy theorist, but he came in as a governor and then continued on his chair as really listening to the experts around him, building his understanding, relying on their expertise, being very data-driven.
Okay, well, let me interrupt, because this is the heart of the matter, Dr. Sahm. You worked with Warsh at the Fed. Do you suggest he will mimic the pattern of Governor Powell, or is there going to be a different approach here where he does not listen to Fed PhDs?
I'm reacting to comments that he made just within the last year. Not, it's over a decade ago when he was a governor. I think, we really need to listen to what he's been saying recently. And he's been extremely critical of the Fed models, extremely critical of the staff and the current Fed officials. So, I think he'll be different than Powell, and it could be different in a way that's disruptive and not productive.
Claudia, I'm looking at a note from Ben Emmons at Highline Asset Management in which he says, quote, Warsh has made it explicitly clear in his Hoover Institution interview in May of 2025 that the Fed is responsible for interest rates, the administration is responsible for the budget, and that this should be the basis for a new Fed Treasury Accord. How radical or out of consensus is that?
It's extremely radical and out of consensus. My biggest concern with Warsh, and I think this is something that he should be asked about by the Senate, right? Like, let him explain more his thinking on it. I don't want to prejudge, but I mean, he's talked about that there needs to be a coordination. He used those words, a coordination between the White House and Treasury on the balance sheet. We need to remember the Fed's balance sheet is an instrument of monetary policy. The Fed has used it to influence long-term interest rates. Short-term political interests of the White House have no business in that conversation.
Revisit a decade ago. I mean, I was at I read only important papers at bars.
Of course.
So, like 15 years ago, I'm at this great Greek restaurant in Midtown, reading 48 pages of Geithner, the world was blowing up, or that. Claudia, take us back to Governor Warsh. And the basic idea that he said we shouldn't ease, and I'm saying this in a very general statement. I want you to tell us, was he against accommodation in the heat of the battle of the crisis?
Governor Warsh participated in helping stabilize financial markets. Right. In the global financial crisis, he was, worked very closely with Chairman Bernanke on, trying to figure out how to stabilize financial markets. He worked on the first asset purchases, quantitative easing. As it moved into the unemployment rate is near 10% and the economy is really weakening, Warsh got very concerned about inflation and was very critical of the Fed using asset purchases to support the economy. It doesn't make any sense. Inflation was not a problem then. Unemployment was the problem. And in the many years after that, he hasn't revisited that and said it was a mistake. So that's where I think his credibility on the labor market is really thin.
And Paul, I'm going to interject here. The wonderful and late and dearly missed Charles Plosser also was worried about inflation, and he came out and said I was wrong. I mean, this was a raging debate. McKee lived this, but at the time. But this is a really important distinction, folks, that maybe will be in the question. Paul, get one more in here with Dr. Sahm.
Dr. Sahm, how contentious are you anticipating a contentious confirmation process for this nominee?
Yes, I am. And I think that's appropriate. I mean, given the moment the Fed is in, these are not normal times. And it's the Senate's job, right? Like, they are supposed to vet the candidate, make sure they have the expertise. And this time around, it is so important that there are very clear lines drawn between the White House and the Fed, and that the Fed chair can really back up that they're going to continue that independence, because it matters for all Americans. It matters for financial markets and stability. So I think it should be a tough hearing, but that's the way it should be.
Claudia, thank you so much. Really, really appreciate your commitment to what we do. We look forward to seeing you Jobs Day, if that's on the date calendar. Dr. Sahm, driving the American economic conversation in her public service to the Fed as well. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Heavy dose of economics today, but far more a heavy dose of what these momentous announcements mean to your portfolios of currencies, commodities. Did you sell all the gold yesterday?
No, I don't know. Boy, look at that.
I tried to unload the boat.
Yeah, exactly.
The kids were on the phone. I couldn't get to the phone. How about the stock market with futures negative 19? And of course, John Stoltzfus is just young enough to remember the panic of Alan Greenspan taking over in 1987. It was a small matter at the end of 1987. Should you adapt and adjust to this, or just steady forward for the bull market of John Stoltzfus?
Well, Tom, I think it's steady forward. It's a rock steady moment when we think about the bull market and what's supporting it. The big change, I think, is for short-term investors, for the traders, for the highly leveraged crowd. Some of these declines that we're seeing in commodities and stocks this morning likely directly related to unwinding of positions that were looking for a much more aggressive stance in terms of Fed policy and lightening up on what remains of the hike cycle. And I think that's what it is. I don't think it's a dramatic change. If anything, the one thing that occurs to me right away is, Trump nominated Powell for the Fed, but he didn't like him. Right. He may have trouble with Warsh very soon thereafter. And I think part of it may have been concern about a weakness in the dollar that had been expressed by Bessent sometime in the last 24 or 48 hours. He was saying it was supportive of a strong dollar after the president had inferred that he liked a weak dollar, and the market plays that stuff on a day-to-day basis. It's why we're not surprised when we go from risk on to risk off, risk on to risk off, and one day's value, one day's growth, one day's mids and smalls.
We do have a little bit of a lift here to the DXY index here this morning, but still with a 96 spot. 3.8, much lower than what we've seen over the last several months. John, we're right smack in the middle of earnings season. This was a busy week for earnings. What have you seen from corporate America so far, and what do you think the market needs to see?
Related to corporate America, what we've seen in the S&P 500 earnings results is double-digit growth again, and double-digit growth not only within technology, but also, as I recall, my screen just went out over here real quick. I went to another screen, so I can't look at the EA page, but I recall that energy was double-digit earnings on the EA page, right. And I think materials was as well. So what you're looking at is really the process, evidence of an economy that shows sustainable growth, likely with the monetary policy that we've had, right. Even if it is at a slower pace than some would like.
This special edition of Bloomberg Surveillance across the arc of the morning, including Paul Sweeney and Scarlett Fu. Later on this morning, the seismic announcement, a new Fed chairman, sometime, Paul, in May, is it? It's like May,
towards
June.
The end of May. Towards the end of May.
Out there, like when it's warmer.
Yeah, exactly. We hope.
We got to get above freezing in New York City before we can have a new Fed chairman. John Stoltzfus leads us off with his wonderful conviction in a bull market that we've seen over the last number of years. Claudia, Sahm, and other worthies will join us for perspective on Mr. Warsh. I look at this, and I'm sorry, as an equity guy, I got to look at the bond market. That's what I was doing last night. It's 7:30 and 8 p.m. Don't tell Mrs. Keene. I was the 30-year bond right now, 4.88%. To me, John Stoltzfus, for everyone, housing, equities, everything, that long rate is the Warsh litmus paper now. Am I right?
Well, I quite honestly, I'll have to say I don't recall what was his litmus paper in the last cycle.
If we get a 5% 30-year bond, John, Paul Sweeney's housing market falls apart.
Exactly. And I think the reality is that we've had good housing markets when we were at double-digit interest rates. I can recall my first mortgage was 10%. One of my colleagues' first mortgage was 16, and his boss's first mortgage was 22. I can't believe it. And the only reason why mine was 10 is the bank wanted to charge me 13. And my seller, fortunately, wanted to move, and I was able to negotiate. What
is this, therapy?
They took it. It is
Dr. Paul.
When you look at it, it's I think there's less need for drama at this moment in the Fed chair name that has come up, and I think that the market is in good stead right now, and it's notwithstanding, on a day-to-day basis. Bears, skeptics, and nervous investors will take opportunity to trim positions without FOMO if they can find a catalyst. And this is a near-term catalyst. But I really think most of this is probably traders reducing positions that were looking for a much more aggressive policy for cutting at the Fed.
Hey, John, we saw, I guess, starting October-ish last year, kind of a little bit of a rotation starting. People kind of maybe moving a little bit out of some of the big tech names and trying to find some value in other parts of the market. Is that something that is going to continue to be a theme in 26, do you think?
Paul, we really think so. We think this is the process now after tech led with great power out of that April 8th bottom last year. I think that the play is here a broader participation by other sectors, because investors are looking for a way to diversify. One thing that I've noticed, it's going to be 43 years sometime between May or July that I reported to my first job on Wall Street. And when I look back, I remember the private investor at that time was usually, a lot of it was cocktail party chatter. How well had they done in a particular stock. Today, people are investing because they know that Social Security, while it will still remain in place, will just not be anything as much of the income they'll need during retirement. And they want to keep a standard of living, so past performance, no guarantee of future results.
You
we would say
that.
Equities tend to be a good place to be to weather inflation, to garner trends that are important for growth.
John Stoltzfus with us with the VIX up a stick, 17.90 on the VIX. If you're just joining us, good morning across America. You have a new Fed chairman. The President of the United States selects Kevin Warsh to be the next Fed chairman per the Senate. And as Paul mentioned, That's a bit iffy right now. We'll have to see what the Senate Banking
We'll see how they do
does.
it. John, what's some sectors here that screen well for you these days? Maybe sectors, maybe factors. What screens well for you guys these days?
We would have to say within the sectors, we continue to like information technology. We don't think we're going back to the abacus or the abacus or the slide rule. We think chips are an important part of life. AI is here to stay and will morph in different ways going forward. We also like communication services at the traditional telephone companies, as well as about 80% social media, the search engines and the streamers. But we do like industrials and have liked them for a long time. Financials.
When you're at Oppenheimer, folks, and this is ancient history, like back to Volcker Greenspan when Stoltzfus and I had hair. There was a guy. We learned the sell side, and we learned the discipline of buy, hold, sell from giants like Myron Picot. We walk in the shadow. He was legendary at your OpCo. Here's what I observed yesterday. Microsoft totally tanked for 14 reasons, OMG, and the entire sell side, 71 buys, 2 holds, 0 sells, John Stoltzfus, ignored it, lifted or adjusted, I should say, their target price, and they're still looking for a blended 30% pop in Microsoft. Can you explain to mere mortals how a aircraft carrier goes down 10% and the sell side goes long, long, long?
I would say the adage of it's better to have time in the market is more important than timing the market for most investors. The other side of it is, investors over the course of, I'd say over the last 10 years, have grown accustomed to buy the dips when they see it happen amidst what appears to be a secular bull market. We often say, not so much buy the dips, but look for the babies that get thrown out with the bathwater, those perfectly good stocks. The traders will hurl down on the floor like a hot potato because there's a piece in a quarterly report that doesn't quite meet up to snuff. And
so, I mean, that's a great story. because a lot of people talking about valuation in the market. Boy, it's expensive. But then the other side is, but earnings are growing. So how do you have that valuation discussion with your clients?
Well, I think the good thing is that earnings are growing substantially, so that those fat multiples may be taken down a little bit as we go forward. And we've seen over the last few years, I think right now we're about at 22 or 23 times, but we've been even higher than that. But the earnings are helping us out. The other side of it is. Yardeni talks about the fact that there aren't enough companies to go into the Wilshire 5000 anymore because there's only, 3,400 publicly traded due to private equity consolidation and M&A. And so what we'd like to say is we think because of the seriousness of people designing their portfolios with advisors or however they may be working their portfolios in terms of retirement, preserving a standard of living, we do think what they're really looking at is they're willing to pay more for each dollar of earnings if the company shows that it's got good management, good product, and that it has cash flow and profitability.
Okay, one more question for John Stoltzfus, folks, as we really line up. But Jay Hatfield, we've just learned coming in, who's absolutely exquisite. To go from John Stoltzfus to
solid.
Jay Hatfield is what this is about. We come to you commercial-free this morning. Across America, the president announces a new chairman subject to banking confirmation. John Stoltzfus, I'm going to ask this question 14 times today. I start with you. The heart of the matter is Martin Zweig would say, if a Fed's restrictive, things change. Can you envision a set of circumstances where Chairman Warsh would deliver a restrictive Fed to the stock market?
Well, I think the stickiness in inflation would mean that we remain somewhat restrictive in the near term with maybe only.
But that generates a nominal GDP that's pretty snappy, right?
Yep. Still, that's the thing. It depends on how tight is the tightening. I could remember very well when people were mourning the loss of 12% yield on bonds, and I was talking stocks. Stocks were going up while interest rates were remarkably high relative to today. The nominal coupons were phenomenal.
One of our listeners sent me a photo from his studio. with 6 Gretches lined up. You know, the jet, the White Falcon, the whole thing. Do you have 6 Gretches at home?
You know, I don't even own one Gretsch.
Alexis, fix this.
I'm a Gibson and a Fender guy and a McCurdy guy. McCurdy is Rick McCurdy, the great contemporary jazz and rock and roll guitar.
But I'm sorry, Sweetwater out in Fort Wayne. I mean, come on, get on the phone.
I should,
get a Gretsch.
You know, I think if I got a Gretsch, I'd have McCurdy rebuild, shape the neck a little bit more.
Un-American. John Stoltzfus, honored to have you in with these important announcements today. He is legendary at OpCo, and I really want to make note. Mr. Stoltzfus, through thick and thin, including April of last year, said participate in the market. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Just off the 4 top headlines of the Bloomberg on the terminal, the president picks a reinvented Warsh to lead the Federal Reserve. Gold and silver plunge as wild swings rock metals markets. Dollar fears are flaring as Trump rekindles debasement trade. And a big take here on Uniqlo. I've never been in a Uniqlo.
No, it's not part of your demo.
But somebody said, I was looking at, what are the tights? The
Lululemon?
The leggings?
Lululemon, yeah.
Yes.
No, I don't own any Lululemon.
Those see-through leggings, you don't own any?
Well, I sized up 2 sizes and it still didn't work as well. We begin our coverage with Katy Kaminski, Chief Research Strategist, AlphaSimplex. Katy, what are the trends in the market right now that Chairman Warsh will enjoy?
Well, this is interesting because today's news has actually reverted the big, I've been calling it the pedal to the metal trade, where everyone's thinking interest rates are going lower. So you've seen, big moves in the dollar weakening. You've seen massive moves in metals, and you've seen equities up as well. So today's announcement kind of has caused a reversion across those different themes. We'll see how long that lasts, I guess. I mean, it's just one day in. It's all new.
Exactly.
Yeah.
So Katy, you mentioned the dollar here. Boy, it has been really weak this year. We got the DXY index 96.5 here. A little bit of strength today, but really weak this year. What's your thought there on the currency markets?
So we saw a pivot in a weak dollar trade starting to strengthen later last year, and we've really seen it accelerate, especially around the commentary last week regarding, Trump's view on the U.S. dollar. I think the general view has been that the dollar is going to be weaker if we're going to have lower rates, but there's just generally been pressure on the dollar for quite some time now. And it has been close to its bottom in terms of breaking out to a new trend, but it hasn't hit a new trend yet. But it's possible. I mean, it's definitely possible.
Commodities, boy, they have just been ripping to the upside. Think about the precious metals. It's just been extraordinary. Gold, silver. What's your view there? We're getting a little bit of a pullback today, but boy, they've been on a tear.
Yes. And I mean, what's interesting to us is also the intraday price action you saw, for example, yesterday, you're seeing, the market has been going up so much, but you're starting to see a little bit of hesitation, a little bit of pullback. I think copper and base metals started to also be a big story as well. And you're seeing intraday moves that, go from really good to really bad to really good. That suggests we might be at a top, but we'll see.
Catherine Kaminski with us on a trend-based analysis with AlphaSimplex. Again, the headline in the last hour, the red sticky across the Bloomberg, the President of the United States nominates Kevin Warsh to be the next chairman of the Federal Reserve System, and with a special edition here of good conversation across Katy Kaminski's equities. We're going to do commodities with Suki Cooper here in a bit, Ira Jersey on bonds. Claudia Sahm scheduled to be with us in the 9 o'clock hour. Katy, I'm looking within trend analysis at tip points or signals. My easy signal on the Bloomberg terminal is a yield on the 30-year bond. If I see a 5%, and maybe it'll get my radar and President Trump's radar up. What is your signal you're monitoring to see the dynamics of the Warsh chairmanship?
So what's interesting is we have been following fixed income pretty strongly in terms of we're seeing more short views, which is suggesting somewhat of a steepener. I think most people expected a much more dovish pick for the Fed, so I think that's baked in some. In general, fixed income has been the hardest asset class to trade for the last year and a half. So we're still looking for something to really break out, but it has been a lot of back and forth in that asset class.
Paul, important headlines from Washington right now.
Yeah, Mr. Tillis saying that Mr. Warsh is a qualified Fed nominee, but Mr. Tillis also saying on Kevin Warsh will oppose confirmation of any Fed pick. So kind of just confirming what we kind of already knew.
The senator speaking in Davos with Jonathan Farrell made it real clear that he's just really not happy with the judicial process, as we saw from Chairman Powell as well. We continue with Katy Kaminski at AlphaSimplex. I look, Katy, at the equity markets, and there's a point where even at MIT, they go, OMG technology. SanDisk this morning, Alexis talking that up. I mean, Katy Kaminski is an old Sun Microsystems hard drive nailed to the wall in her office. Katy, are you surprised by the technology juggernaut that we see right now?
Well, I mean, I think the market has been kind of trying to process some of these, can we go higher recently? And that's what you see. I mean, you've seen a little concern this week in the tech sector, and we've actually seen more of a rotation. So places like EM have been the big winner because of the metal moves and other things and the weak dollar. But, you have still seen technology showing incredible results. So I think even though there's a rotation, these signals still continue to be strong for tech. And there's we'll have to see we'll have to see continued earnings, but we really still see that trend continuing.
Bond market, looks like fixed income yields are, I don't know, they've moved a little higher, but they still kind of seem within, ranges bound, I guess, at this point. How do you think about that?
Well, I think what we have seen with fixed income is there hasn't been a lot of movement in fixed income over the last year and a half, and it's been very difficult to trade because a lot of people are anticipating a steeper yield curve. They've been worried about inflation. That hasn't been. And now, of course, there's been a lot of focus on the construction and setup, how the Fed is going to look in the next few months. But we have to remember that the U.S. is still not done with its cutting cycle, whereas other economies are pretty much at the end, especially if you look at Australia. So we're kind of in that inflection point trying to figure out what's the next move in fixed income, and it's been really hard to tell.
Where's your opportunity right now?
So the biggest themes we're seeing, there's huge moves in the commodities. Short positions in cocoa, you're seeing long positions in silver, platinum, palladium, anything that's shiny is really on the top there. But also the US dollar weakness trade has worked very well, and Australia is benefiting from some of these big moves in metals.
I got James McCann on deck, but Katy, help me here with dollar. Let's go off the vanilla DXY right now. What's your scope and scale? Paul mentioned 96. Are you going to give me, I got to make some news, Katy. Can you give me an 89 weak dollar on DXY?
Oof. That's a big one. I'd say, I think we've gone pretty far already. So I think, I would say it would take a lot to get to 89, but if we had a very strong rate cut move, why not, right? So right now I'd say low probability, but possible.
Okay, Katy, thank you so much. Catherine Kaminski with AlphaSimplex this morning there on some of the trends that we see.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.